In the last couple of moments, we have had that announcement from the Bank of England Monetary Policy Committee. Interest rates are going to be cut. Analysts had predicted a quarter-point cut, and that is exactly what's happened. The base rate has been cut from 4.75% to 4.5%. It is the third time the interest rates have been cut since August 2023, when those, well, actually they were going sky high in 2022, weren't they? Good news if you're on a mortgage, coming off a fixed rate, on a variable rate, or indeed got a business loan. So good news for an awful lot of people. Okay, of course, we always see the savings rates at building societies and banks go down far quicker than we see those mortgage rates go down, don't we? We'll talk about that with Justin Urquhart-Stewart in just a couple of moments. Also going to be talking about migrants who claim benefits to be banned from ever becoming British citizens under Tory leader Kemi Badenoch's plans to tackle immigration, and civil service officials risking losing their jobs unless they actually find ways to save money from their Whitehall budgets. Do you believe that'll ever happen? Come on, give me a break. Well, that's what ministers are announcing today. Also, I'm going to be talking to the wonderful Sharon Davies about Donald Trump announcing that he's going to ensure that no trans athletes are going to be able to participate in the wrong gender sports at the 2028 Summer Olympics in Los Angeles. The US president yesterday signed an executive order barring trans participation by, well, trans women, i.e. men, participating in women's sports. Don't we need that to be across the board here as well? And the harm created by social media is similar to the cancer caused by smoking. Who said that? Well, Britain's head of counter-terrorism is saying it. He's called for a ban on social media being used by children. A lot of us who don't like things being banned generally might perhaps be in agreement with that, eh? We'll talk about all of that coming up. Coming up in the next 10 minutes or so, we are going to be talking to former Downing Street Chief of Staff, Lord Barwell. He was Chief of Staff to Theresa May when she was Prime Minister. First up, though, let's talk about that interest rate cut with Justin Urquhart-Stewart. He's an economist and he's also chairman of Regionally Investment Platform. Very good afternoon to you, Justin.
Afternoon, Julia.
So this is what the experts had said was going to happen, and unusually the experts were right. It's happened. Why have they decided to cut rates now?
Well, they finally realised that to get the economy moving, as everyone keeps on going about growth the entire time, you have to reduce the cost of money. If you really want to get this economy moving, yes, it's that vital word confidence, but actually what's most important to people in Britain tends to be their biggest asset, which is their house. Yeah. So if you encourage people actually either buying a house, and buying or selling, or upgrading their house, something like that, actually what happens is you go out and, well, the kitchen goes, the bathroom goes, you spend more money.
Yeah, you got to deal with stamp duty if you're going to deal with that. I'm sorry, stamp duty is the single biggest stopper for that.
And what they should do is reform that. In my view, stamp duty is the wrong way around anyway. There's nothing they can do about it on that, because the person who makes money out of stamp duty, really, it should be actually the people who are actually having to pay stamp duty when you're buying. Actually, the people making the profit are the people normally selling.
But also it shouldn't be an absolute fortune because, as you say, the impact of people moving. So you can buy a one-bed home and then you can buy a two-bed home when you have kids. And then if you have another kid, you can buy a three-bed home. Otherwise, we've got people now going, well, I need to have the one home I'm going to have for years because and people don't downsize. I think stamp duty is just an absolute disaster of a policy. But is that going to be enough? Because cutting the cost of money, 4.5%, okay, historically pretty low. But people got used to, didn't they, this sort of new 0.25% interest rate. When homes, and particularly this is what affects, for most people, my audience right now, what affects them massively, as you say, is the cost of a mortgage. When actually home prices are still sky high relative to people's incomes, does it make much difference, or if the interest is 4.75 base rate or 4.5% base rate? Is it about the direction of travel, or is it the amount?
Well, I mean, it's encouraging it's moving, because actually some of the figures we've had out are talking about very low growth. They're talking about potential inflation getting a bit higher. So usually a very conservative Bank of England would have said, actually, we're going to hold rates as they are. Yeah. I would be encouraging the government to say, look, forget that. Bank of England does not necessarily control interest rates. Interest rates are under control of the government. They can actually take that power back anytime they like. Yeah. They should significantly reduce the cost of money, not by 1/4, but by 0.5%. Making a significant difference to all of this. And as for stamp duty, you should say anything, what set the figure? 500,000, 750,000, anything below that, you don't actually have to pay stamp duty for the next X number of years. Get that moving again, and you'll start seeing some difference.
But again, we've always got that balance, haven't we? Of like, if you get the economy moving too much, you get more inflation. I mean, again, we're already seeing, lots of prices. Energy prices are still expected to go up. Food prices still are going up. And I'm always amazed as government ministers saying we're going to have more money in our pockets. No, inflation is still rising. Prices are still going up. What about how this impacts business? Because we've seen massive impacts on business. £25 billion tax on jobs, national insurance rises, and the threshold moving down as well for when you have to start paying it. That's had a massive impact. There are an awful lot of businesses who took out loans, particularly businesses who just sort of struggled through lockdown periods. Interest rates on their loans is a big issue as well. Will this help people?
Right, this is a key element, because remember, the biggest employer, I know we discussed this before, is in this country are smaller businesses. We're really good at it. We set up more businesses than actually France and Germany put together. And in order to do so, you need the confidence and the courage to be able to do so, because often you're putting up your house as guarantee and things like that to be able to do it. So people need that confidence. So yes, this helps, but there's a lot more the government can do without spending money to be able to encourage this. We have the enterprise investment schemes. You could do that on a regional basis. You can focus that on the technology centres we've got around the country, the success areas where actually we're really rather good at, which we don't hear too much about.
Yeah.
So the government could do a lot more than just this. 0.25%, yes, thank you, but it's not very dramatic. It's not going to make people get terribly excited, rush off and go and set up another business. What you need to do is to actually say, right, okay, here we have a plan which is actually going to not just reduce the cost of money, but encourage people to be investing and setting up, getting that vital word of confidence back, and then encourage those people, particularly the lowest area of the housing market, to go out to be buying and selling and then spending, doing up their houses. They VAT.
It's all joined up, but it always comes back to, and it's a subject you come back to again and again, it comes back to confidence. Justin Urquhart-Stewart, always great to talk to you and see your red braces as well. Economist and chairman of the Regionally Investment Platform. Thank you very much, Steve, for that. Philip Ingram has been joining me throughout the show. He's still here. Philip Ingram MBE, is a former senior military intelligence officer. Again, I don't understand why these decisions are taken by the Bank of England and not by politicians. These are ultimately political, not economic decisions. Even the economic decisions, they have a political bias. Your theory about what motivates people will be motivating the members of the Monetary Policy Committee. But do you welcome this change?
I do, because hopefully it's the green shoot of the economy getting better. But I think there's too many other indicators with employment losses, companies closing down, and all the rest of it, to suggest that the Bank of England is slightly concerned that maybe what they had done for too much beforehand, they need to try and correct, because the economy is not in as good a position as they thought it was. But the global economies are being disrupted by the disruptor-in-chief because of all the statements he's putting out. People can't plan things. They don't know. And countries don't like that. Economies don't like that. Politicians don't like that. World leaders don't like that. Yeah,
and the reality is, of course, that actually an awful lot of what happens in our economy is totally outside of our control, whether it's, what lockdown, even if we never lockdown policies, Ukraine war, and as you say, Donald Trump. Absolutely fascinating. Thank you very much indeed.